Hey guys, this is a market update. In this video, a new report from Fidelity about the Ethereum merge. We're going to go through this report. They have a lot of data here showing us exactly what's happening. Also, we're going to look at the price because Ethereum is essentially breaking out of this resistance right here, bear market resistance. We also have Bitcoin breaking out as well. So I just want to look at price targets here, also some on-chain data of both to see what is fundamentally happening. Timestamps for everything down in the description. The Fidelity report is fascinating, not just because it's so well researched, but also because Fidelity are treating Bitcoin and ETH and digital assets just like any other asset class, which I think is the signal. All of the FUD and the noise surrounding choke point of crypto, I think, is going to pass because digital assets are definitely going to continue to proliferate, in my opinion. Anyway, institutions are bringing them on right now. So we have broken through this bear market zone. So this entire bear market zone, you can see over the last 350 days, essentially a 12-month period of finding a bottom. That was $1,000 on this occasion right here. And we are now, we've broken out of this price resistance that we got. This was around the merge time, and we've broken out of it again. Now, for right now, we have to see if we actually flip this resistance into support. Like I said in previous videos, we'd want to see a drawdown, right? So this week, you can see everything is up, right? Everything's just booming, and you have this rise, everything because of the correlation going up. But what I want to really see is the next drawdown. Where is that price? Because you're looking in trends at higher lows. And so whether we flip this resistance into support and create a higher low here, that is really important for me. But for me, we are definitely going into a new bull market, in my opinion, breaking through these zones. Now, if we go to the day chart and the week chart, you can see these are the next real major support and resistance zones for ETH anyway, 2,500 and then 3,000 to the upside. I don't expect to be getting these anytime soon, of course, but we can have a look at this on the week chart. If we just reset, you can see major support and resistance zones around here. So that's the weekly right here. Really, there's just no zone here that we can have as resistance until that point at 2,500. That could be a mini target for this current bull move before maybe a pullback, who knows, and then maybe a secondary target at 3,000. But that would probably require, obviously, the economy to be in a much better place, and we've still got a recession to deal with as well. In terms of Bitcoin, again, you can see a breakout of this bear market resistance right here. We just chopped right through it and then through the resistance. Now we have a resistance level at 31.8 and then a secondary resistance up here at around 37. If you go to the week chart again, you can see that, some support in the previous drawdowns and then right here resistance. So those are targets for me. Bitcoin almost there anyway for the first target. But you can see these big bull moves. Like I said, these are uptrends right here. So what we're looking for is the next pullback. Where is that to get another kind of support zone in the further uptrend? And so they're looking very, very good at the moment, fundamentally so, because the growth is so good, which I'll get onto into the Fidelity report. If you are a trader, get a deposit bonus on Bybit up to $4,000, link in description for that. The Ethereum Shanghai upgrade has gone through successfully. What this means is if you stake Ethereum now, either yourself through solo staking or through any service like Lido or Coinbase ETH or Binance ETH, you can withdraw that directly from the protocol without any issues now, whereas before it was locked up. The reality is that most people that are staking ETH use liquid staking anyway, which means that you could just trade out of your liquid staking token anyway for like a small discount, a few percent or so. But now it is 1-for-1 out. So you don't have to rely on an open market to buy back your staked tokens. You can go to the protocol and get 1-for-1. So that means essentially more institutions are going to absolutely love Ethereum because it's a growth asset and it pays a yield right now. So let's go over the data. All signs point to more staked ETH. Now that's good and bad potentially for yield, but we'll look at that later. Although some believe allowing withdrawals will decrease the amount of staked ETH, we think the amount could instead rise due to the following. So a lot of people thought that this unstaking could unleash a huge wave of selling onto the market. That just hasn't occurred. It hasn't been the case. So you can see the amount of active validators just going up and to the right. It's a growth network, and that is going to continue. Now, important here as well is that staked ETH, like I said, most people that have staked ETH use either Lido staked ETH or Binance or Coinbase. And so during the bear market, when you can't unstake your ETH, If you need liquidity, then the only thing you could have done was sell your staked ETH on the open market. And of course, during bear market drawdowns, you're not going to get one for one. And so unfortunate for people that needed liquidity at the time, but for others who were dollar cost averaging, you were buying ETH at like a 20% discount or a 10% discount. And obviously that's now one for one. So relative basis, take out the price moves, you were getting a discount on the ETH there. But you can see that's moved down, that's moved up to essentially one for one now, because the open market is essentially gone at this point, because you don't have to sell, you can just redeem one for one. So that means it's a more robust protocol. The amount of Ethereum staked is actually very low in comparison to other networks, maybe because of the lockups, but also because of just DeFi being a lot larger. Maybe ETH itself, the base layer asset, is locked up in many more protocols. In any case, you can see the difference here. Staking percentage difference between other networks could narrow. So maybe we go from 15 to maybe 20 or 30%. But ETH is used in many different protocols. And so it may not ever reach what you're seeing with Cardano and Solana. In fact, Cardano staking levels have actually decreased recently as DeFi has grown, because people are using ADA in different ways. Even though most of the time you can actually keep your ADA staked, that's just what has happened. Less Cardano is staked. So Ethereum staking may grow a little bit, but I think it'll be down to supply and demand dependent on what the yield is. And that changes dependent on how much ETH is actually staked, which we'll get onto next. Since the previous upgrade, which was the merge, ETH issuance has been negative, which is why we get real yield. And you can see that from Fidelity as well. Ethereum is providing real income considering current burn and issuance rates, but this may change over time. So this actually changes dependent on how many people are staking. The more people that are staking, the less yield that you get. And so Ethereum could move towards being inflationary again. It really depends on how much the staking is. So as you can see here, since the merge, there have been many periods where the issuance rate of new ETH has actually been negative. How does that happen? Well, blockchain fees are paid, and some of those fees are used to burn the issuance. So there's an amount of issuance depending on how many validators there are. But then of that ETH every day, some of the fees that are paid are used to burn tokens. And so the net issuance may be positive or negative. You can go to ultrasound.money and just see this for yourself. I'll link them in the description. You can see here, since the merge, there are a few weeks of positive issuance again, which obviously isn't good for investors. But then as, users come in and we have more of a bull market now, or at least, something that isn't terribly bearish, we can see that issuance is way, way lower. So this is negative issuance. So this is like a stock buyback, right? Where you have fewer tokens because the fees are paying and burning these tokens. So you have fewer tokens, which is like a stock buyback. So that supports the price, or at least a little bit. So you have negative issuance, no inflation, plus the yield that you're getting from, staking itself. So for right now, that's very good. However, you can see Fidelity believe the increase in staked ETH will continue. However, the timeline and future stability of these trends remain unclear, because obviously we don't know what the macro situation is going to be, but also as more people stake, the yield decreases. So there's just going to be a supply and demand in that. You can actually see the yield dynamics from this chart as well from Fidelity. So right here, Ethereum doesn't have a fixed supply schedule. However, the parameters set by the protocol impose a cap. This upper bound for inflation is often overlooked and supports the narrative that income from Ethereum staking is relatively sustainable. So here's what we have. You have the validator count going up, which is this orange line. And as you can see, the more validators you have, the lower the yield that you get. So fewer validators means that each of those has obviously more issuance to them, so a higher yield. So the APR for the validators and the priority tips, you can see this is just coming down, these two arrows down, as the amount of validators goes up. The total yield right now, if you're staking, is around 5%. Now, if validators keep increasing, then yield gets pushed further and further down. You have more issuance to the new validators, and so more issuance. Obviously, that has to come in with fees though. So are fees going to stay stable? Are fees actually going to grow? Ethereum's upgrades are trying to actually reduce the cost of the Ethereum blockchain, which is good for scale and obviously not good for fees. But there's a balance here with everything. If you charge too much, you won't get scale. where's the balance there? So they need to scale to have more use cases, more users. So this whole thing is a supply and demand. But for right now, it looks like 5% yield on a growth asset is absolutely insane. So you would expect this to be coming down further as more people invest, more people stake because they want that yield. So it's just supply and demand for me. As long as the network is growing users and those L2s are growing a lot of the gas that they consume, then it may stay negative. But we just don't know that in the future. I don't think it matters. It's a huge growth asset with major demand and scaling coming. So for right now, it doesn't matter. 5% yield is pretty good in the meantime. I've got some data here on how these networks are scaling as well. I think the next bull market is going to be the layer 2 bull market, or the scaling bull market. We've had proof of concept now. It's been 15 years and there are blockchains and they have a use case. But now the next bull market to increase fundamental valuations is, can we reach scale? Can we just reach more humans interacting more on the blockchains? And the answer is yes. So this is the Lightning Network. You can see just grinding higher all the time. So Lightning Network scales Bitcoin. It's a layer 2 instant settlement, virtually free of charge instant settlement, very low cost. So that can scale payments for Bitcoin, which is obviously a massive use case. That's happening. If you look at Ethereum as well, it's scaling. So you have layer 2 networks on Ethereum is insane, right? You have Optimism, Arbitrum, Polygon ZKVM, you have ZK Sync Era, you have Scroll, you have Coinbase launching their own layer 2. So it's very clear that there's going to be a huge amount of scale coming from these networks, which benefits the base layer cryptocurrency. You can see here that Arbitrum actually just eclipsed Ethereum L1 transactions during the launch there. So it's important to know that the scaling is occurring. For me, that's the next big jump in fundamental valuations, is reaching this huge scale, and it is occurring right now. If you want to know more about those fundamentals and on-chain metrics, I have an entire section on this in the crypto course, linked in description. You can see that here, it just goes through them. I also updated all of these metrics during the latest course update. I update it for free for existing users. All of the updates are free forever. You can see here, Bitcoin on chain, Bitcoin and Ether scaling. This was in February. Just seeing the data here is really important. If you want to check out the crypto investor course, 300 videos there and private Discord groups. I'm in those as well, so check that by the links. On-chain data is also showing very positive signs. You can see MVRV score here, just coming out of bear market accumulation zone. You can see we're nowhere near the top of a bull market, and absolutely nowhere near. The macro situation is still very tough, still trying to go through a recession in many parts of the world. And so this is nowhere near, bull market territory. When MVRV starts spiking up to, above 5, especially in this red zone, that's typically the top of a bull market. That is not going to happen until the real economy is firing on all cylinders. That's just nowhere near occurring. But you can see here, the tides have turned a little bit for the on-chain. We can see pure multiple as well, really good, showing the depths of every bear market drawdown, and obviously the top of every bull market as well. This is kind of midway through. This is actually a miners multiple. It shows how profitable miners are. So as we can see here, they're doing pretty well. Now, this again is, top bottom half. And so again, accumulation for me. But when we start getting into the top half, that's when you have to considering, do you really want to start mortgaging the house or actually go and buy Bitcoin there? But nowhere near it for right now. But positive signs, at least, that this industry is growing. You've seen fundamentally users and adoption is growing and scaling is occurring, and the macro is starting to turn as well. So make of that what you will. Bitcoin and ETH then both breaking out of their resistance, and price leads narrative. Everything I've said over the last year or so has been showing fundamentally that the networks are still growing and just making higher lows in their adoption over time, which is the real signal. But price does lead narrative, and so this breakout is important as well for the growth of the assets, and it is occurring. If you are a trader, link in description to a deposit bonus on Bybit up to $4,000. Check the crypto investor course as well. I'm James, it's MyZG. Cheers for watching, and I'll see you in the next one.